Hey traders, how's it going? I'm back. Tom Willard here with another video update. It's been quite a few weeks here since I did my last video on January 2nd. Um, Called the concern in the market. If you've seen the video, I talked about how urgent it was to watch and listen to what I was talking about. The spies here was right here at this point. We'd made lower highs. I talked about the rollover in the moving averages, and the move down here has been precipitous. $10. I'm sorry, $20 a share here from about 204 down to in the low 180s, and it's popped back up to 195, and now it's hanging out here looking for a double bottom, possibly on the daily chart. You see on the weekly chart, we came down testing this area, took out the lows, but hanging, holding so far on the weekly chart. But things look ominous. They look lower still. Now, you may be able to get bounces. What I do with my trading is I'll play intraday or even multi-day bounces off overextended stocks to the downside. But it's a tough game. If you don't know what you're doing, I don't suggest you try it. Watch it, learn from it, but it can be dangerous. Playing these double bottoms when they get overextended, but you can make nice, I mean, technically if you find a way to get in here long in the 185 area and get out in the mid 190, 192, 193, you're making a nice little profit here as long as your stop is worthwhile for the bounce. So my general jest, and what I'm going to talk about in this video here, I want to show you a trade I did today that was a really nice trade. And it's a very simple trade on a nice, I'll show you the multiple time frames. It's a cup and handle and a breakout pattern and also kind of like a no follow through pattern all in one. So it's a really good lesson here. I'll talk about that shortly. I want to spend a little bit more time on that. Um, but what I want to talk about right now is just the general approach I'm taking. I think the markets are going to be going lower. I think we're going to go much lower here. If I bring the monthly chart in, you'll see we've had a pronounced long run up with some hiccups along the way. A lot more wider range candles here on this monthly chart. We're looking to break this support area about 180, and when it does, I think it won't be straight down, but I think it'll come down. I think we may get an overall move. Let me draw this out even further. If you look at this entire move off this area, I mean, a retracement back to the 140 area wouldn't be too far-fetched. Now, granted, the moving averages will roll over here on the monthly if it goes that far, but I think it's even reasonable to come back to 160. So just something to think about, 160 to 140. Obviously, we could collapse and go all the way down and test these lows in the 80 area from that 2008 mess that happened. But there's a lot of tension out there, and as I called it in my last video, it's been a very lucrative month and a couple of weeks. It's been amazing actually for me as I got short in a number of names and get long in things like gold, and I'll talk about that here shortly. And again, my general approach is I think we go lower, but I think there'll be bounces and long opportunities in between. On the well, let me move this out of the way here really quick. Okay, it's out of the way. And on the Qs, just take a look at that. You'll see it's also quite beat up here. Okay, came down here quite a bit. Again, my video here got down and has been down ever since, moving lower. Not much of a bounce here. A lot more weakness on the QQQ as opposed to the SPY. So again, I think lower prices are in store over the next several months. I think there'll be bounces. Like I said, we'll use these moving averages as your guide. When they pop back up like this, look to try to get short. Don't chase shorts on the downside, but look to get short where it makes sense. Now, I talked about gold. I started buying gold both straight up. A couple of this ETF. I own this ETF as well as did some options on this ETF. Quite a bit out of the money as well as in the money when it was down in this area. I picked up some shares here at 102, 102 and change, and then it's been a hell of a run here. Pretty much came up clean on this weekly chart massively through this pivot point. I think we're going to go higher. The daily chart, you'll see it really moved here a lot, and it kind of climaxed here, and there could be some downside. So my general approach and what I would suggest to you and what I'm going to do, but again, you do what you want to do, but just watch it. If you're not trading for money, paper trade, that's the best way to learn. I'm going to be looking to add to my position. Okay, I think this gold is going to run higher. You can see the monthly chart here. It's gone down quite a bit, and this little pop, although massive on the daily chart here, you'll see on the monthly chart is just a blip. We've got resistance areas here, but I think it's pretty much cleaned out. I think this thing could run back up to the 170s. Again, not next month, not even 3-4 months from now. I think it's going to take probably the rest of this year and beyond possibly, but I think we're going to see higher gold prices in general. So I'm looking to buy pullbacks, kind of like on the market. Short retracements, moves up, okay, to the to the moving averages area, okay, looking for patterns, and I'm going to talk about some patterns here, or a day trading pattern I took earlier. But you want to be buying pullbacks to the rising moving average. Now, this moved up so fast, you got rising moving averages here, so you want to see a pullback. Where would I like to buy this thing? I'll pick up more shares if it definitely goes down to 114, 115. I think that's a great entry area there on a pullback. And it may take a few days. I'd like to see a gentle pullback rather than a rapid one. Okay, or it may base out here, and I might buy it again at 120 or add to my position. Okay, but GLD here is wonderful. Franco-Nevada is another one I own. Very nice move here off the lows. Okay, I saw this peekaboo failed breakdown, got loose on it right here, riding it up, still in it. Still riding that thing up. AEM is another one I think I talked about in the last video. I can't recall if I did or not. But anyway, it's been a nice mover up here to these highs on the weekly chart. I think this is definitely worth watching for continued entry. But again, I'm watching for pullbacks. Don't be chasing stuff up here, guys. Okay? Let them pull back. Now I know it's pretty unnerving when the GLD does this, and you're like, oh crap, I missed the boat. And at times it'll just keep going, and you will miss the boat. But it's unsafe, in my opinion, to just start buying stuff when they're extended like this. Okay, I own this. Okay, but I'm telling you right now, do not buy it. It's too extended. I'm going to look to buy more, but it's got to pull back. Okay, so general approach again. To recap, golds. You look at some of the silver mining, the mining stocks. The GDX is another one. Look for pullbacks. Reasonable pullbacks, 30% pullbacks, 50% pullbacks, retracements to get long. SPYs, Qs, some of the other sectors, financials on bounces to declining moving averages, you're looking to get short. Okay, that's what I'm looking to do in general. Unless something comes out and there's a major change in the worldwide markets that change things to a bullish tone. Right now, that's my bearish tone. More long gold, more short on general markets. Okay, I am buying into a couple of sectors. I'm finding that I think this housing sector is going to have some run in it possibly. It's come down here quite a lot. It isn't a downtrend on the weekly. It's a downtrend on a daily. Okay, but I'm pulling this up, and I actually nibbled into this off this pullback here and this sweep of this low. Okay, and I'm keeping my stop pretty tight, just under this area. So if it can't bounce, okay, I got in right in this area here, 28 and change. Okay, and my stop is going to be about 27. Okay, so I'm only going to risk about $1 a share on this for a bounce on the XHB. Okay, so watching some of that and some of the housing stocks. I think one of the strongest housing stocks, if you're interested in a housing stock, is DHI. I own this one as well. Bought into this one today actually off this red bar, no follow through. This green bar pop right back up. You can see the breakout here on the 60-minute chart. Got in right there, right about $24 a share. Okay, my stop's right under the lows here. You get a double bottom on the 60. Now again, you're going counter trend, okay, to the daily chart, downtrend. Weekly chart's down, is still in an uptrend, but in a sense it's broken the trend line, and you can see the rolling averages are moving over, so that's not good. That ain't pretty, okay. DHI here though, you see the relative strength, and if you look through the sector, some of the other sisters in this sector, DHI is probably one of the strongest ones, and so I like it, so I've been nibbling into that one. Bought into Facebook. I mentioned this. I think I tweeted this earlier this week. This precipitous move back down here. Okay, I think this stock is one of the strong ones that came up. It did pull back with the market, but when it did this almost gap fill here on this green day, when it got down and started coming up, I got in. Okay, nibbled into this thing. Okay, and have a small position. My stop's going to be down under this area here on this bottoming tail. And if it comes back down this area, I'll build up my position. I might nibble in some more, or if it holds this area and gives me their setup, I may add to it over 105. But I'm going to be watching this as a long. And again, with my general sentiment, the market's going lower. Most stocks will not be spared. This one included is definitely one that is not going to get spared. So if you get in this and you're nibbling like me, again, just take your stops, take your loss, your small loss, and get the hell out of Dodge if it doesn't work out. Okay, but I'm nibbling in this one. All right. Let me go to the trade and the technical lesson for this video. All right, let's talk about the setup. FCX, Freeport, well, it doesn't really matter what the name of the stock is. It's Freeport-McMoRan, okay, is the name of the stock. And it has been just getting crushed. Okay, there's the weekly chart. You see it's in a nice steady downtrend. Okay, daily chart's in a downtrend. Okay. So it's in a downtrend. But the bottom line is look at the volume picking up here as it gets down to this $10 to $8 to $5 level. Look at the volume here. as it capitulated in a sense. Now it didn't capitulate to the point where it was able to spring back. It took a while. It grinded and grinded, and now it's popped here on volume. And then when it pulled back here in this kind of a flag fashion, look at the volume drop off. Okay? This put this on the top watch list. Last night when I scanned, I said I'm going to watch this for a long opportunity today on the day trading chart because of this beautiful little pullback flag off this low and this high volume kind of sellout. The weak hands really sold out here, in my opinion, and I think this thing can go higher. In fact, next week I can see this thing going up to 7 to 750 a share. I'm watching it. You could buy this and hold it overnight today. You could have bought it and hold it. Now I got rid of all my position. It was a day trade, so I was in and out. Okay, but I'm going to break down for you why. But that's why I was watching this. My scans, that I did, manual scans, go through and I was like, hey, this has got a shot. If it can get up over this $5 mark, right, this traffic here on the 60-minute chart, it's got some room to run. And I think it can go up to this next area, which is about 560. Okay, so let's look at the setup. Let's go down to the smaller time frame and look at the setup. Okay, I'm going to just show it on here on the one, because I really traded the 1-minute chart. But the 3-minute chart is also another one I trade, and I wanted to show you what this was too. It's a kind of a number of things. Okay, 1-minute chart, we gapped up, we went up. It tried to break out here, and then it got slammed down. It held this 510 area. Then it came down, took out the low, and then could not go lower. It went down, okay, to 508, I believe, right? 508, yep. Came up, retested, couldn't go lower. Volume drying up here at this low as it broke the new low, okay? And then it came up here, back up to the high, 520, okay? And then it pulled back. What does this look like to you guys that have been around, right? It's actually a cup and a handle. Look at the cup, and there's the handle, okay? Top edge, down to a new low, back up to a top edge, coming down here in very low volume, okay? Very low volume. So this is a breakout, actually, and it's actually called a continuation pattern in my book around this here. We came down, we took out the high, took out the low, came out, tied the high, consolidation bar, okay, on lower volume, buy the high. 521 is your entry, okay? You'll see it pulled back here. I put my order in for 521, and it hit right there. I got filled, full lot, all my shares I wanted. Of course, this does 44.5 million shares. You're going to get your shares, okay? You could buy a pretty big position and don't even worry about slippage too much on something like this. That's why I like trading some of these names. In at 521, where's your stop? 515, right? The low here, what did the low out, that handle low out at? 516, 516, 516. Okay, so you got a nickel stop. Now, to get your 3-to-1 reward to risk ratio, you got to get 15 cents. I looked at this bad boy. I said, okay, well, wait a minute. Let's just take a look here. How much room do I got? I talked about the 60-minute chart. It's not shown here because I had it up earlier. Right? I said 560 was my target to where you get to that next congestion level up here. Okay? And because of that, that's about 560, right? From 520, that's 40-cent target. 40-cent target risking 5 cents. That's 8-to-1 reward to risk. 8-to-1. That's damn good. 3-to-1's good. 5-to-1's excellent. That's what you want, what you can look for. 8-to-1 is fantastic. It's worth the risk. Okay. So fast forwarding here. In fact, what I'll do is I'm just going to go back to the 15-minute chart here, and I'll go back to the 60 here, and I'll just drag this bad boy in here. This is the 5. Okay, let's just make it big. And there it is. There's your entry on the 5-minute chart, 521 right there. Look at this, seamless, straight up. Okay, you get a little pivot here, 540. You get a big shakeout here. Hit my target at 560. 8-to-1 reward to risk, piece of cake. Okay. Now, could you trail stop this? You could. If you trail stopped it, you'd be out here about 538. You'd be out here, or maybe here at 545. Just depends on your management technique. Okay. But that is the entry and the move, and it was actually beautiful, and it was done by 11:45. You can see it topped out at 570, so it went higher than I anticipated, but that's fine. And then it just kind of pulled back. Now, as I mentioned on a daily chart, this daily chart is so sweet that I was thinking about holding some shares, but I've already got options on this thing anyway on the long side that I scooped up. All right, already. And I love this setup. I could have held some for a swing because, like I said, I think this breaks 6 next week. Again, assuming the markets don't completely fall apart next week, which is possible. And I think it goes and it ventures back up to this area here. Off this kind of exhaust, I think at least comes up and kisses this declining 20 like it did here, okay, and like it did here, and it actually peekabooed above here. But I think this declining 20, which is sitting at fast average is 8, so it's at $8 a share, 805. I think this thing can get up there. It may not get up there in 1 week, okay, but I think it's coming. Or it may sit here and wallow until this catches up to it. Okay, but like I said, I've got options on this. I anticipate it going to 7 or higher over the next week or two, and if not, I get out. Okay, but you could hold this swing over long, and I considered it, but I thought I'm technically already in its swing with my calls, so I'm just going to ride this thing and take my profits on this beautiful 8 times my risk return on this 1 day trade today. So again, you do say you do 1,000 shares as a round number, you're risking $50 and you make 400. If you do 2,000 shares, you're risking $100, okay, and you're making 800. 800 reward for 100 risk, okay, 2,000 shares. Not a lot of buying power required at $5.21 a share with leverage, okay, piece of cake. So anyway, I hope you found that helpful and useful. It's a pattern I use all the time. It's one of my favorites because it couples the bread and butter cup and handle with a breakout play, with a diminishing volume, with a continuation pattern on the 3-minute chart, okay, and it just scoops it out and you tie in the longer time frames. And it really can be a very, very nice way to make some great cash on a day-to-day basis in the markets. All right, guys, until next time. Trade well. Be careful out there. Use your stops. Do not trade with real money if you don't have a clue what you're doing or if you're new to the game. Paper trade, it don't cost nothing but your time, which is important and is actually very valuable, but it's worth it to just track, and make sure your edge is an edge, okay, and then manage your trades to your plan so that you are able to take advantage of those edges and don't get emotional. All right. Until next time, have a great trading month of February. I'll probably be back to talk to you in March. Obviously, hit me up on email, as many of you do, if you have questions on specific symbols or stocks, or tweet me on Twitter.